All right, folks, it is Monday, the 10th of March, and it was a big down day, big down day. Today was actually, well, not just today, but by the way, this thing, I wasn't in the hospital. I went to the shooting range today, and they put this little band on your wrist depending on if you go rifle, if you go pistol. I was rifle. Anyway, the last 2 months, I mean, it's really been a kind of a very fascinating learning period if you choose to look at it that way. And I know a lot of people don't. A lot of people don't understand it. People are very dogmatic. They believe in a lot of this kind of monetarist mythology. I try to debunk a lot of that. But let me just try to explain the dynamics of what is going on here right now. So at the beginning of the year, the government, the Treasury hit the debt ceiling. All right, now the debt ceiling doesn't allow the Treasury to issue more securities, more bonds and notes, stuff like that. Now, there was a way around it where Treasury can engage what they call extraordinary measures. They can do kind of like, I don't want to call it cook the books, but, some accounting gimmicks that give them a couple of months of spending room. Now, don't forget, throughout this whole time, and really for the last years now, government spends a lot of money. We're talking about 7 trillion plus. So those flows, they just pile up in the banking system as reserves, okay? When the government spends, it doesn't matter. Sending out Social Security checks, paying the military, Medicare, Medicaid, defense, you name it, education, all this stuff. The whole entire budget outlay, 7 trillion plus is just like massive reserves increase in the financial system, in the banking system. And then the Treasury sells bonds and notes and bills to drain out some of those reserves. And it has to do that. I've explained this in the past, okay? You got a financial system with a structure and then an overarching regulatory structure. The regulatory structure says to the financial system, you have to have a certain amount of capital for the amount of assets in the system, okay? That's like a requirement. That's a rule. The government makes it up. All right? It could be any kind of combination of assets and capital, but they settled on a certain amount. And so when the government spends and those reserves go into the banking system, reserves are assets. So as those assets pile up, the system, the financial system, needs to have enough capital to back that because that's the rule, okay? And so every now and then, the government sells securities, bonds, notes, whatever, to drain out some of those reserves. Reserves are just risk-free assets, okay? But they still require capital, which I feel, and a lot of people feel, that's like a ridiculous rule. That's a ridiculous requirement because reserves, and for that matter, treasuries, they're risk-free assets. They should not have a capitalization requirement, but they do. That's what they made the rule up to be. Right now, they're talking about getting rid of that rule as it pertains to reserves and treasuries, but it's still there. I mean, this genius Besant, he said, we have to do a rigorous analysis of that rule. I mean, you know what the hell it is. So anyway, if you look at the system, the financial system, like I said, it has a certain amount of assets and those assets need to be capitalized. But when the government spends, those assets build up in the system as reserves, okay? Those risk-free, low-yielding assets. Banks would much rather have loans, higher yielding things, okay? Now, normally that's no problem because, like I said, Treasury sells bonds and notes and bills, and that drains it out and it keeps it at a certain level, and everything is good. You could think of those debt sales as like a regulator mechanism, like a regulator, you know? It's not borrowing. It's just done to maintain a certain level of assets to capital. It also helps in the Fed's setting of interest rates, okay? Because if you didn't have that, the reserves would basically pile up to infinity and the rates would drop to zero, okay? People would be like paying you to give you their money, okay? Think about that. So anyway, what happened with the debt ceiling is like now they can't sell the bonds and the notes. So they can't, that regulating mechanism of selling in order to drain those reserves, that's not happening. So it's like your toilet bowl is overflowing, you know, and the flush is not working. All right? So like, this is very destabilizing for the financial system because you had in the last 2 months, really since January 8th, and really just very recently, 500 billion in reserves dumped into the financial system. You have to have an increase in capital, or at least if you don't have an increase in capital, you know, the financial system likes to keep a buffer. In other words, let's say you need 10% has to be capital. They keep it higher than that, 15, 20%, you know, because they have to go through stress tests, but that the Fed makes them go through. And so they like to keep a buffer. It's like, let's say in your checking account, you like to keep a certain amount of money, whatever that is, $5,000, $10,000, $300, whatever that is. And you feel good as long as you have that amount. But if it gets down below that, you know how you feel? You start to feel a little stressed out. Like you need to have that minimum that you like to see your balance not fall below a certain level. Same thing with the financial system. They like to have their capital to asset ratio at a certain level with a buffer, like not just meeting the regulatory minimum. They like to have it more. So when you're dumping 500 billion in reserves in a very short period of time and they haven't been drained out, you know, it's stress. The financial system gets some stress. And this is what's happening. Now, on top of this, you got a lot of other stuff. You got, you know, the tariff. People are freaking out about tariffs, even though right now there has been zero impact from that. Okay, as far as I could see, I look at the customs deposits, tax deposits every day. There has been no change really in that whatsoever. You know, today Trump said, hey, I can't guarantee we're not going to go in a recession. You had the Atlanta Fed come out with a negative forecast for first quarter GDP because that was everybody front running the tariffs. It's not a big deal. That's a one-time thing, okay? It's not like, I mean, if we were really going into a recession, I'll tell you something. You would see gold would be crashing, which it's not. You'd see job losses. We just had the job report last week. We had 151,000 new jobs created. You know, maybe it's not 300,000, but still, it's not a negative print. We haven't had a negative print. So we're not going, and I look at the petroleum data, I look at gasoline demand, I look at distillate demand, you know, that's like diesel fuel, that's in commerce. I look at distillate demand, I look at gasoline demand, I look at exports, I look at all that stuff is fine, okay? There's nothing that I could see that saying we're going in a recession right now, and the fiscal flows are extremely strong. So this is what's going on. I mean, you've had like a shock to the system. The toilet bowl is overflowing because the flush is not working. All right, how do you like that analogy? I think it's a good one. The flush is not working. The toilet bowl is overflowing. And it's really stupid. Now, it's stupid because this is all political. Like Congress needs to raise, if you raise the debt ceiling right now, I'm going to make another one of my predictions, which remember a couple of years ago, I said coming into 2023, when it was the end of 2022, and everybody was saying we're going to have a recession in 2023. I said if they raise the debt ceiling, we're going to make new all-time highs in the stock market. And they raised the debt ceiling, and of course we all know what happened. 2023, the market took off. You had all these bearish guys on Wall Street. They got buried. They got destroyed. I was the only one who said that was going to happen. And I'm saying it again right now that, I'll qualify this a little bit. I'm saying right now, if they raise the debt ceiling, the market's going to bounce back. But I still want to see what Congress, the funny thing is, they got to do something by Friday. And the stuff the stuff in the House, the bill that's in the House right now, they're not saying anything about the debt ceiling. It's bothering me now. Because if they don't raise the debt ceiling, that's a problem. Okay? Because that basically, the Treasury's finished with these extraordinary measures. They can't keep doing it. So that basically puts us at a spending level which is only supported by tax deposits. All right? Which means that's a big cut, man. That would be like, what are we running, like a 1.5 trillion deficit? That's like an immediate 1.5 trillion drop in spending, net spending. I mean, that's freaking, now you're talking about massive recession, okay, if they don't raise the freaking debt ceiling. It's already bad enough if they don't raise the debt ceiling because we don't have that drain of reserves like I've been talking about. But, on top of that, it's going to be like an immediate cut in fiscal flows. So they're playing with fire here, let me tell you. Now, here's the thing I really want to talk about, because all of these people, and that applies to many of you here on this channel, well, maybe not many, but I know there's some jokers here who constantly, they post up these comments, disparaging MMT or talking about, they're printing money, the value of the dollar, blah, 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 they're printing money. If you don't see right now, there have been 500 billion printed into the system in the last 2 months. This is exactly what's causing the collapse because of what I just explained to you. The toilet bowl's not flushing anymore. You had too much assets dumped into the, money printing. They're juicing, they're pumping, they're juicing, they're pumping, they're pumping, they're juicing. They juiced it, they pumped it, and that's what's causing it to go down. So all of you jokers who think the market's up because they're juicing and they're pumping, that causes it to go down. All right? From the explanation I just gave you. You cannot have a system, a financial system, with a certain structure, with an overarching regulatory structure and mandates and requirements, and then suddenly dump in a massive amount of new assets and not expect that this is going to be destabilizing. It would be like you have a little rowboat, with 3 large people in there, and then somebody comes along out of nowhere and drops in a 500-pound sandbag or something like that. What happens to the boat? Bloop, 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 bloop. It goes under. That's exactly what's going on. You had this boat, the ship of, the financial ship of state, let's call it. Everything's running fine. Everything was the way it was supposed to be. You had just the right amount of passengers. You had just a big enough boat for that amount of passengers. Then somebody comes along or something happens where this massive, gigantic weight boulder gets thrown into that boat. And what happens to the boat now? Blah, 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 blah. It doesn't have the flotation capacity that it had. That's what's going on. Now, normally, what does a boat have? It has a bilge pump, right? Here's another good analogy. What does the bilge pump do? It prevents the boat from flooding and sinking, right? It pumps out. That's what the treasury sales are. I hope you guys are still watching this video at this point, because I think I just came up with a genius analogy. I think it's better than the toilet bowl. The bilge pump. Every boat has one of those things to prevent the water from building up inside the hull of the boat and sinking the boat. That's what treasury sales are. It's not borrowing. You don't borrow what you can create without limit. And it's impossible for the treasury to borrow dollars unless they put the dollars in the system first. You cannot borrow something that doesn't exist. I've done a million zillion videos on that. I'm not going to go in it. But treasury sales are like the bilge pump in a boat. It drains out the excess. You don't need massive... The banks don't even want all these reserve assets, okay? They don't want them. They're like... It's like dead weight to them. Although now the Fed pays interest on them, they don't mind having it because they're getting a pretty nice return on that shit. It's like free money for the banks. I mean, we don't get free money. They're getting free money. So that's what it is. The bilge pump is been shut off. It's not broken. Congress could turn it back on anytime, but you know how that goes over there with those jokers. The bilge pump has been shut off. All right? And so the boat's filling up with water. As soon as they turn the bilge pump back on, things will right themselves. That's what's happening in a nutshell. And the next time you hear people saying, they're pumping, they're juicing, they're pumping, and all this nonsense that they don't freaking understand, and they never, ever try to understand. They just stay with their stupidity because everybody else says the same thing. They're pumping, they're juicing, they're pumping, they're juicing. You know what they're pumping? They're pumping water into the boat and it's sinking the freaking boat. That's what's happening. Anyway, that's it for today, folks. Please like and subscribe if you've done that already. Thank you very much. And please go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you guys tomorrow. Don't panic. Everybody stay calm. Stay calm. Even if there's a recession, that's the best time to be buying stocks. We have our system, our economy. We have automatic stabilizers. And we'll know, like if you go in a recession, if we go in a recession, you see the automatic stabilizers start to kick in. It tells you when to be a buyer at the bottom. That's how you get rich. But we got time, before. Hopefully it doesn't happen. But if it happens, we'll follow it. We'll know. There's no reason to get nervous and anxious. I know it's not fun looking at your portfolio going down every day and the market going down and people freaking out. I understand it, man. But try to control yourself. It's not so bad. All right? See you tomorrow. Bye.